Analysts have been increasingly bullish on Ethereum, predicting the price could reach $10,000. Market participants are watching for a breakout from a multi-year triangle consolidation. On-chain metric analysis suggests Ethereum has entered an expansion phase. As a result, the cryptocurrency could rally to challenge its all-time high by February. Boosted by ETP flows, ETH inflows from exchange-traded funds, ETF, have surpassed $1 billion this month. These substantial inflows indicate that the cryptocurrency is gaining traction as a stable asset for diversified portfolios. In addition, the inflows could trigger additional investment from institutional entities such as BlackRock and Fidelity. ETFs are financial products that offer investors a basket of securities in one security, providing instant diversification and low transaction costs. They are traded on major stock exchanges just like individual stocks, and their prices fluctuate throughout the trading day based on supply and demand. The popularity of ETFs has grown in recent years thanks to their low risk, transparent pricing and accessibility. The launch of spot Ethereum ETFs may attract significant investment capital, potentially driving the price of ETH to new highs. However, ETH ETFs do have some quirks that may affect their long-term performance. For example, the SEC orders approving them prohibit the staking mechanism that incentivizes ETH owners to secure the blockchain and dispense rewards for their efforts. This limits the ETH ETP's ability to reduce the circulating supply, which can exacerbate price fluctuations. In spite of these limitations, ETH ETPs should still be able to drive a large amount of new liquidity into the market. Moreover, the SEC's approval of Ethereum ETPs is a positive sign for the entire crypto industry. The fact that the SEC has cleared a path for digital assets to become securities demonstrates that traditional investors can now invest in them. This newfound liquidity and interest from ETPs may encourage more traditional investors to enter the market, further fueling demand for cryptocurrencies. The growth of ETF flows could also attract regulators and investors to explore ways to integrate these products into the broader financial system. This scrutiny could lead to the development of new regulations, taxation policies and more. As a result, the influx of new capital could propel ETH and other cryptocurrencies to new highs this year. If this trend continues, the crypto market could see a paradigm shift in 2024. Increased demand for NFTs and DeFi. The world of NFTs and DeFi, decentralized finance, is growing rapidly, creating new market areas for gamers, collectors, and investors. In this nascent industry, people are using blockchain technology to remove intermediaries from financial transactions. Examples include crypto wallets, smart contracts, and platforms that allow users to lend or borrow money without the need for a central bank. These innovations are making the financial system more accessible for regular people who don't want to deal with banks or other middlemen. This shift could create a new wave of demand for the Ethereum platform. Non-fungible tokens, NFTs, are digital representations of real-world assets that can be traded on NFT marketplaces. Many of these tokens are virtual in nature, but some are linked to actual goods such as real estate or art. People can also use NFTs as collateral for DeFi loans. These loan offerings can be a great way for gamers to unlock liquidity while still retaining ownership of their prized in-game assets. In addition, NFTs can also be used to represent real-world assets that are backed by valuable intellectual property. This allows for new market opportunities that combine the benefits of both the real world and the digital world. For example, a wine case backed by the NFT WIVX can be sold to buyers who want to enjoy the taste of fine wines without having to buy whole bottles or store them in their home. These innovative solutions are just the beginning of a new era for finance. As more people invest in NFTs and DeFi, they will likely push the Ethereum platform to new heights. However, NFTs and DeFi are a new frontier with numerous challenges, including regulatory uncertainty, scalability, and interoperability between different blockchain platforms. Therefore, it is crucial that investors and players carefully assess these markets before taking on any risk. By doing so, they will help to ensure that the future of this innovative industry is as bright as possible. This could lead to significant gains for ETH over the next few months. The Pectra upgrade. The Ethereum network has a new big upgrade on the way. The Pectra upgrade, scheduled for March, will introduce a number of improvements that could make the second largest blockchain even more powerful. In addition to making it faster and more efficient, Pectra aims to tackle problems like scalability, expensive gas fees, and complicated staking requirements. The Pectra upgrade combines 8 major upgrades, or Ethereum Improvement Proposals, EIPs, into one package. It is designed to bring a range of speed and efficiency improvements to the Ethereum network, which will help it to meet increasing demand. Some of the EIPs in Pectra will provide significant user-centric improvements, such as account abstraction and changes to staking rules. These are expected to improve the experience for ETH users and boost the ecosystem's value proposition. Others are intended to address underlying issues with the Ethereum blockchain. For example, one of the key proposals in Pectra is a move to native rollups that will enable the network to scale up without needing to increase block size. Other EIPs in the Pectra package will focus on improving the security of the Ethereum virtual machine, EVM, the environment that runs smart contracts. These are designed to reduce the risk of bugs in the code and help developers write and deploy contracts more efficiently. In terms of scalability, the most important EIP in the package is a change to staking rules that will allow the Ethereum network to double the data availability capacity of its proof-of-stake, polonium 2 sulfide, system. This is expected to significantly reduce staking costs, which has been an ongoing source of frustration for many small investors. This will reduce the amount of time that validators spend checking each transaction and could lead to lower gas fees. Overall, the Pectra upgrade is a significant milestone that could drive demand for ETH and propel the cryptocurrency to new highs. However, it is important to remember that market factors will play a critical role in determining Ethereum's price performance. The Trump endorsement with the upcoming Pectra upgrade boosting scalability, and fresh speculative interest sparked by Eric Trump's endorsement, Ethereum is on the verge of a major rally. Moreover, the coin is poised to surpass its 2021 all-time high of $4,800 as it breaks out from a recent consolidation phase. A technical analysis by Ted Pillows reveals that ETH has entered the short-term expansion phase of its price cycle, signaling that a breakout rally is in the works. This phase is typically followed by the onset of new all-time highs as investors unload their pent-up demand. Pillows highlights that ETH has broken out of an downward sloping wedge pattern on the daily chart, and that the breakout was accompanied by volume spikes. He adds that if the cryptocurrency can reclaim $4,000, it will confirm its breakout from a consolidation zone and could surge to $5,000 in the near future. Moreover, the analyst points to rising institutional interest in ETH as another bullish factor for the coin. He explains that US-based spot Ethereum ETFs have seen 5 consecutive days of inflows totaling $505.1 million between January 30th and February 5th. BlackRock's ETH fund emerged as the leading buyer, accumulating $579 million of the inflows. This growing interest in Ethereum-based investment products signals increasing confidence among institutional investors, a key factor that can boost prices by attracting new buyers. The market's renewed optimism is also backed by rising US consumer confidence and retail spending data. This trend has helped propel Bitcoin and other cryptos higher, despite the fact that the Federal Reserve is expected to keep interest rates steady next month. Moreover, the Trump administration has made it clear that they are open to working with the cryptocurrency industry and could implement regulations that will make it easier for banks to provide services to blockchain businesses. In addition to these bullish factors, Ethereum is set to benefit from the Bitcoin halving cycle. Historically, Ethereum has underperformed Bitcoin for about 8 months following the halving event before it explodes in value.